I would say that the pressure on the spot crypto market and squeezing it into traditional finance is not necessarily better for the customer. In many instances, you're taking a product like Bitcoin, which is long only, cash only, no leverage, and pushing it into a market where you can lose more than you put in. Spot trade on Bitcoin, I can only lose what I put in. Suddenly I find myself with leverage products. I find myself with futures where I can leverage, spot ETFs where I can leverage, and eventually I'll have some options on there. The risk level is not for the faint of heart when you're trading in these products that only trade Monday through Friday from 9 to 4. So it's a higher level of risk for an individual customer, squeezing it all into the traditional financial side.
How can options trading interfaces be improved?
What's tricky with those interfaces is that everybody has the price ladder, which is your calls, your puts, and all the prices. Difficult to get started to learn how to do this. If you've been using it a long time, you can spot all the different values with it. Where there's opportunity to improve this is thinking more like the trader thinks, as opposed to find your strike, find your expiration, find your price, kind of optimize. Being able to look at this and say, an event happened maybe on an index, so SPY is up a certain amount, I want to sell 20 deltas. So get me into the view quickly on the options book, as opposed to have to me click through and filter. Several brokers have tried to do things, and there's different things like option searches, different strategy categorizations. They're just other ways to kind of filter down the grid and narrow it. But most people think about options, most companies that provide tools think about it as the option specific flow, not necessarily how the trader thinks, which is usually going to be some underlier is doing some activity or some piece of information that then translates into how do I use that specific tool or instrument to execute my idea. And so connecting maybe from the chart or connecting from the concept that you want to do directly into where you'd want to express that idea on the options ladder would be really good opportunity to improve. Further down the line, you can get into like GPT type things where you have large language models where you can interact with the UI and help it filter down. But the main thing is, how do you consolidate all that information into what is relevant to you at the moment you need to make the trade? And just having the grid view is pretty much what everybody uses, but it's not really friendly and easy to really get up and running.
How have the mobile devices developed?
In the US, largely our customer base is using desktop products, multiple windows, multiple options grids, risk graphs, things that they can get and mix it up. Now, my second largest source of options activity is from my mobile device. So reconciling those two sort of mindsets is really tricky, because you go from 2 or 3 screens of information down to 6 inches, pretty tough. We see our mobile as our largest growth area now. However, it's typically from people that trade options like a single stock. So instead of trading directional Apple or SPY, they're trading single leg options as a proxy to the underlier. So it works really like a day trading stock type function. It's harder when you get into strategies if you want to do verticals or spreads and to really understand what you're doing, although very possible. We just have to figure out how to get away from the options tables. Geographically, that data changes. If you look at Europe, they skew much higher on the mobility solutions than the desktop solutions. And they're also skewing higher on the complex trading of options as opposed to the single leg options. So it's interesting. There's different preferences, but it's very challenging to get this table form into the mobile form and have it make sense in a trader workflow. What all of the brokers have done is basically give you screens that you walk through, but not really tied them very well together as a workflow that an options person would think about.
How will AI change financial services?
We view this technology as a piece of infrastructure that can help us as an operator, make our operators more valuable and scalable. What that means is today when you call in, there's certain tools that can be used to help identify voice activity, and we can, using artificial intelligence, that identify where you're calling from. Is it a known location? Did you just log in Tennessee and call us from New York? Like that kind of stuff, we're able to match and catch things. Also with trade activity, so different types of surveillance, compliance, authentication. All those tools help us better understand who the customer is and service them. But where it gets really interesting is what can we do to better create an interaction for you? So you call in, I know that it's John on the phone, and maybe you're excited or irritated about something that's going wrong. The hardest part about servicing you or any person is I've got 200 reps, 200 different personalities. They're all going to have varying degrees of experience. Somebody may have started today, somebody might be for 10 years. So you're going to get a different experience in any one of those 200 folks. However, if I can create a solution that's listening, understanding, and providing some recommendations to my operator, this is what John is talking about. Here's the issue. He's had it 10 different times. Arming him with the information to better quickly get you the answer. That's where there's really good opportunities for us. One, to make that representative more scalable, more standardized, but also give you a much better experience. Because if I'm on the phone, I'm like, John, I see you've called in 6 times. I know it's a real problem. Let me escalate this right away to my team. I'm armed with that. I don't have to dig for that information. So we're really focused on how do we help our contact center improve what they're doing and become more scalable. We're also using it in different chat tools. So when you're interacting with us on chat, we're able to synthesize that information, summarize it, get some sentiment out of it, and help our reps better understand what happened. Could they do better? Could they do worse? The real accurate stuff you can do is in operations and making the business much more scalable and being able to service customers in a very personalized way at scale. That's where we see this technology, where we're trying to deploy it.
How will AI change analytics?
I think we have to park the SEC rules around it to the side because that's pretty challenging at the moment. And any kind of interface that we use that has any type of suggestions or tailoring, it gets really close to what the SEC is calling advice. And so as a broker, we don't give advice. So if we can park that and say, what could we dream up that would be interesting? A lot of what we're looking at and imagining is even experimenting with this. How can I allow you to either verbalize or type your intentions? And how do I grab the information and data and interfaces that you need to get those to you? So you could say, the S&P's down today, what happened? We are able to translate that through a GPT language model into different API calls. And so we're able to go on and scan for news. We can figure out if there's anything happen. Fed just announced minutes. Does that have any impact? Start to grab some different sources and bring back items to you. Now, do we just bring back the raw materials to you? That's okay. If we're able to synthesize and summarize that into something that could be meaningful to you, that's where we start really helping you as an individual trader. I don't want to read 10 pages. Tell me what's on it, what's important to me. That kind of stuff where we can consolidate and synthesize a lot of information is where we think that this is going to ultimately be strong impact for the customer. When you look at the market data we have, the fundamental data, all the different information we have, today we give you tools to interrogate that information, and they're visual. It's like an order ticket, a chart, a radar screen. Those are good. But it's not the way that you were used to shopping for stuff. It's not the way we're used to interacting. So how do I kind of break that paradigm and give you something that's a little bit more interactive for you, and I don't make you look at everything. I only show you the things that are relevant to what you're trying to achieve. So that's where we think a lot of this analytics changes for us.
Where do you see growth opportunities?
The big one we're focused on is in the derivatives market, options specifically. It's part of why we're here. Options is getting a lot of attention industry-wide in the US, and they're kind of red ocean. So it's already an established, mature sector. Where there are growth opportunities are not necessarily in that existing pool. We see the international jurisdictions as one area where there's a source of new interest coming in the market. Typically, it's in jurisdictions that are liberalizing their own domestic policies to help bring capital into the markets and encourage capital to trade in foreign markets. So we see a lot of that starting to take hold as a growth opportunity. The other opportunity is in the last 10 years, we've cultivated a sizable universe of customers that are focused on digital assets. And those customers learn to trade on things that don't close, are available 24/7, can be traded in the smallest increment of a penny. Those are typically spot cryptocurrencies, but they're now being exposed to derivative instruments. And those customers are going to start to learn futures, learn options through these markets that never close, through different types of tooling than we have today in the existing securities markets, that customer base is eventually going to cross over. The question is, do our customers adapt that type of model 24 hours, or do they come into more of a traditional market which closes? So as a provider, we're looking at, we have to figure out how to get to extended hours. We have to figure out how to get more than 3 products trading pre and post market on options. So there's things we have to do to lay the groundwork. Otherwise, we have to connect into a different venue that's trading something, maybe like a Coinbase or Kraken, that has derivative instruments that trade on 24-hour markets. So those are 2 markets that we see as potential untapped areas.
Would a smaller tick size on a new exchange, FMX, appeal to traders?
Potentially. It is easier for someone to understand a smaller outlay of cash. Let's say a more broader audience. If I can spend $10 on something versus, let's say, an SPY future, which is a different price point. So, and an SPY future is not divisible by other than 1 unit. Being able to have smaller unit sizes expands the potential market participant size. It could be interesting for them to cross over. I think things that are going to matter are how long the markets turn. These new exchanges, they need to connect to FCMs or brokers. And it's hard for TradeStation to connect to a new exchange like that without having customer demand driving it. There's a lot of infrastructure that comes with it that we need to build out. It's easier for someone like a Coinbase to take their audience and connect in, or better yet, buy that service and provide that to their customers. So if that type of product is presented to this audience, it's probably compelling to them, likely compelling to them, and they will receive growth from within that market. But we've bifurcated the derivatives market by, let's say, traditional finance and crypto finance at the moment. And do we bring them back together or not? That's an unknown. Largely what we see is the crypto markets are adding more and more traditional financial services in their own flavor. So they will likely have more and more products available to trade. So the person that got started on Bitcoin can now trade Bitcoin futures. They can trade oil futures. They can trade SPY futures on Coinbase. How far away is it before they can trade some other single stock futures or options on those futures? Potentially securities themselves, the stocks on those exchanges. So they're going to be trained in a totally different mindset than what we're used to in the traditional markets of the people that have been trained. And there's this sort of old versus new weirdness that happens. And how do we close the gap and access that group of customers to be able to really grow the derivatives business?
What kinds of tools are customers using?
What we're looking to do mainly is provide a lot of flexibility to the customer base. So we provide a native trading experience that we've built that we think works for the customer base we have. But we have a huge ecosystem of third-party plugins that connect into our brokerage solution. So you get to this place where you basically say, bring your own product, bring your own platform. If you don't like what we built, you can bring TradingView, you can bring Options Alpha, you can name the tool, CQG, you can bring it over to us. It's probably already integrated. All you got to do is log in, your TradeStation account is there. So now you have your own analysis, evaluation tool. You can even execute through a lot of these tools. So you're just leveraging what you would get from us, which is brokerage, custody, and service. And we excel at service. We think we're pretty good there. So from there, we give you this real flexible experience. If you like what you have, use it. You might like the mobile app, but you want to use CQG's front end. That's totally possible. You have your own post-trade analysis tools. You can use those also. We make it so that you can really wrap around the experience. And what we see here in the US is that the desire to use some of these off-the-shelf components is growing pretty rapidly. It used to be that TradeStation, Fidelity, Ameritrade, we were the entire experience for the customer. Now with so much analytics, research, data, unique interactions, there's a lot more choice, and we can't compete with the variety. So rather than compete, we allow them to come in and play. So we see a growing business on the third-party side where people want to use a tool and they want to come to us for the execution and the pricing. We see it also internationally. On the international side, it's more. Surprisingly, many more people want to use whatever it is that they're used to using, connected into the US markets here. In the Middle East, they are very focused mainly on mobile solutions, but also not just what we offer, whatever third parties are relevant to them. The nice part about that is you can get it in your own language. So I have an app that's in English. If you're in France or you're in Czech Republic or you're Dubai, you can have it in your localized language with a localized tool and some level of localized support for that app, and still have access to the US markets through someone that will work with you as a broker dealer, give you fair pricing, and give you excellent service.
What is happening in India?
It's the largest option market in the world, 80% of all options contracts through India. What we're observing is the liberalization of their domestic policy, specific to financial services, is opening the door for Indian participants to trade outside markets. And we're getting a lot of interest into the US. There are challenges inside of there in terms of what banks from India will work with what banks in the US. When we had the crypto entity, we had challenges because in India, crypto was illegal. So just getting working through some of those kinks made it a lot easier for us as we exit the crypto business. They have a pretty robust market, and they've cultivated some pretty serious traders over there that are looking for exposure outside of their market. And we're seeing some pickup in the Indian markets here. The sheer scale is a little distorting because there's so many people there trading here, it can dwarf our business pretty quickly. But the sophistication level, meaning we're not seeing single options traders that are using basically options as leverage directional bets. We don't see that as much coming out of the international markets. They tend to be more sophisticated people trading strategies, hedging a portfolio, doing things that a more experienced trader would be doing, as opposed to a YOLO bet on a Tesla option. We see a lot in the US.